Hey everybody, hope this finds you doing well. This is Danelle here at Networkchain. Let's go ahead and jump right into it. We're going to talk about the amount of money that is flowing into crypto, particularly Bitcoin, when it comes from some of the largest institutions in the world. Watch what they do, not necessarily what they say. Let's go ahead and start with the cryptocurrency market update. You can see Bitcoin is currently vacillating between that $89 to $91,000 range currently. At time of recording, it's now at $89,749. It's down about 1.6% over the past week. We have Ethereum trying to hang on to $3,000. It's basically flat since last week. Then you have Solana. It's still down a little bit. It's about $131, down about 4.5% over the past week. We have Dogecoin, the largest meme coin of them all, currently down 7.68%, trading just under 14 cents. Then we have Cardano rounding out the top 10, trading at around 42 cents. So if we look at the Bitcoin chart, you can see that we're still trying to see what Bitcoin wants to do moving forward towards the end of this year. We only have a few weeks left in 2025. Some people are claiming that we will have a so-called Santa Claus rally. Obviously, that remains to be seen. We're still a couple of weeks away from the largest downturn that Bitcoin has experienced since earlier in the year, when it went down to around 80,000 a couple of weeks ago. So we're seeing a little bit of recovery, obviously from that level and that low. We have still yet to recover back to $100,000. So we'll see if we'll get there in the next couple of weeks. That's definitely a possibility. We could see a nice bounce, continues to see a bounce from that $80,000 low, but obviously anything is possible. We will see what happens in the macro when it comes to the U.S. Federal Reserve decision coming up this week. There's a possibility that we could have some more rate cuts, and with that, there could be more positivity when it comes to liquidity that will be open in the market, because more companies, more people, more institutions would be more willing to take their assets from fixed income assets like bonds, for example. When you get lower yields because the interest rates are cut, they're willing to go to higher risk assets, and Bitcoin sometimes can be a beneficiary of that. So obviously time will tell. So it will be really interesting, and what I'm looking at is what Bitcoin is going to do over the next several months, especially the first and second quarter of 2026. If we see that Bitcoin is able to hold up above this 80s, $77 to $80,000 level, and even start to trend back up towards 100,000, even if it stays in this range, that's a good thing, because it can still be an accumulation period, and then there's still a possibility that we can see a leg up. Now, if we see that Bitcoin is not able to get back up to this 106,000 level or so, maybe I even say $110,000 level, and hold above and trade above that level and close above that level on the weekly or even monthly candle, then we definitely could be going back to what people call the 4-year cycle, where 2026 could be a down year for Bitcoin and most other cryptocurrencies. So obviously we will keep you posted over these next several months, but it will be interesting to see if Bitcoin is able to stay steady above that $80,000 range, or whether or not we're going to see a breakdown and start to come back down towards some of these levels back here, where we don't see another level of support till around $55,000 or so. So we'll obviously keep you posted, so stay tuned here at Networkchain. So one of the main reasons why we wanted to make this video is that you want to make sure that you see and follow the money. So we know that Charles Schwab, for example, is one of the largest asset managers in the world. They currently manage, I believe it's approximately 10 to 12 trillion dollars in assets under management, and it has been well documented that they have been considering getting into crypto trading. They have now allowed for their clients to buy into, and you can see here, this is their cryptocurrency investing page. And you can see that they have different ways that you can invest in crypto using exchange traded products like the Bitcoin ETFs that are currently out in the market, that came out in January of 2024. But we also have heard that they will soon be opening up spot crypto trading, where you'll be able to, if you want to buy the actual Bitcoin or Ethereum token, then you can, as opposed to buying a wrapper. These ETFs are considered like a wrapper because basically BlackRock, for example, their Bitcoin ETF buys the Bitcoin and holds the Bitcoin, and for doing that and having custody of that Bitcoin, they charge you a fee. for being able to create that wrapper basically for you to buy and hold. Now, if you hold and buy Bitcoin on its own, then outside of the blockchain fees that come with trading on the Bitcoin blockchain, for example, you own that Bitcoin and are responsible for that Bitcoin. But if you own it and leave it on Charles Schwab's brokerage, then there's still third party liability because they're still technically holding your Bitcoin. But if you buy it on Schwab, you then have the opportunity to remove that Bitcoin off of their platform and move it to a cold wallet and have single custody of it yourself. But then obviously you would have the responsibility of yourself to make sure that you secure that Bitcoin. But they are offering that opportunity. And so we're seeing other brokerages doing that as well, including Robinhood, for example, Coinbase, some of the other cryptocurrency exchanges. You can buy what they call spot crypto. And then if you choose, you can have those cryptocurrencies transferred to an independent wallet that you have control over. So you can see here with the question, can I buy and sell individual cryptocurrencies directly in my Schwab account? It says no, but we now know that Schwab is going to be offering crypto trading and spot crypto trading. So I guess they have decided, because it says Schwab's clients were interested and engaged in cryptocurrencies, and that they did plan on offering spot crypto trading after regulatory environment changes. We have seen that in 2025 with, for example, the Clarity Act, as well as some other regulation that is still being worked on currently with regards to federal regulations on cryptocurrencies. But we are seeing now that Schwab is planning to launch right here crypto trading in 2026, as it's shaping up to be one of the most consequential moves from a major U.S. brokerage. So you can see here that they do own about 12 trillion of client assets, and they do intend to open up, at least for now, Bitcoin and Ethereum trading across its platforms. And they are considering, or they are currently going through internal testing and a limited pilot phase. So you can see here that Charles Schwab's CEO said that this was a topic of high engagement, and that currently Schwab clients own about 20%, which is pretty amazing how much they own of the crypto exchange traded products that are currently out. So basically out of the Bitcoin ETFs, the Ethereum ETFs, Schwab customers and clients have about 20% of those products. So it just goes to show that there's absolutely high engagement. And so it just only made sense that Schwab is now going to be offering the opportunity for their clients to own Bitcoin and Ethereum outright. And so you can see also that, and we're going to go to some of the others as well, Charles Schwab, Vanguard, and Bank of America all magically launched crypto trading for clients, or at least made announcements concerning crypto trading for clients, all within a week or two of, as we saw in the Bitcoin chart just a couple of weeks ago when Bitcoin went down to 80,000. So a lot of people believe, there's a lot of, and there can be a lot of games and manipulation that happens in the open market, particularly with volatile assets like Bitcoin, which is extremely volatile, highly leveraged. And so when you have an asset that is as leveraged as much as it is, then you can see these stark downturns and stark upturns as well. And so we're seeing that, a lot of these larger institutions, companies, sovereign wealth funds, that are taking advantage and buying from those so-called weak hands. So if this is something that you're interested in and believe in the digital asset for the future, we here at Networkchain believe in that. So we're definitely holders, at least for now. And so we're not going to be shaken out. So we're holding on to our Satoshis, regardless of whether it goes down to 80,000. We're going to try to continue to accumulate over time, because we believe over time that Bitcoin will continue to go up in price. And Vanguard, which also holds trillions and trillions of assets under management for their clients, also decided and did an about face to allow for cryptocurrency trading, or at least Bitcoin ETF trading and Ethereum trading, ETF trading on their platform just this past week. So their former CEO said that they would never allow for cryptocurrencies to be traded on its platform. And now that they have a new CEO, and I'm sure with a lot of interest from their clients, some of them even moved their assets off of Vanguard because they were disappointed in the fact that they were not offering trading of the ETFs. They now, just this past week, have opened up trading, and they did, from my understanding, about $1 billion worth of trading just within the first hour or two of trading of those ETFs. So it goes to show that there definitely was a thirst and interest in the cryptocurrency market. So you can see here that due to the global recognition and interest of cryptocurrencies and the promise of decentralization, technical breakthroughs, economic utility, and speculative allure, combined with institutional endorsement and global regulatory shifts, they have decided to allow trading of select third-party cryptocurrency ETFs and mutual funds through a Vanguard brokerage account. So they do not currently offer their own crypto products. Schwab, for example, does have a fund that holds a portfolio of Bitcoin miners and other crypto adjacent companies in their fund. So there's definitely some different packages now that are coming out from these larger institutions if you want to have some type of exposure to cryptocurrencies. BlackRock, which is the largest asset manager in the world, which currently holds about 13 trillion of assets, they now own about 60% of all Bitcoin, of the Bitcoin ETFs. They own about 60% of all of those Bitcoin. And also, they have about 3.9% of all existing Bitcoin. So they're definitely doing very well. We did see some outflows over the last month or so, but no matter what, it's still become BlackRock's most profitable product. Basically, in just under 2 years, it has done billions and billions of dollars in trading, and to the fact that they have about almost 4% basically of the Bitcoin supply, just goes to show how rapid the interest was in Bitcoin. And so we are continuing to see the demand that is coming into the space. So despite the cryptocurrency price of Bitcoin and some of the other larger cryptocurrencies, we still believe in the future of blockchain technology and cryptocurrencies, because you see just now a lot of these major institutions have decided we want in, and so they only come in if they believe that they're going to make money. So if these so-called smart money players are coming in and they're just coming in now, if you got in earlier, that means that you knew something ahead of them. So why would you sell out of something now if they're just now getting in? Because they still plan on making money. So if they're getting in at 80,000, 90,000, 100,000, they want to make 2, 3, 4x on their money as well. So do we potentially see that Bitcoin could get to 150, to get to 200, maybe 250 one day? Absolutely, because we're seeing that the shift is happening. It's a finite asset. It cannot be inflated. There's only going to be 21 million. So we're about getting our piece. One last quick story. Bank of America, another one of the largest banks in the United States, have now expanded crypto access to its wealth management clients, and they are now able to recommend upwards of 4% of digital assets to a portfolio. Obviously, it's very volatile, but banks and asset managers can make recommendations when it comes to certain investments. And now Bank of America has decided that given the strong interest in the thematic innovation of blockchain technology, that a so-called modest allocation of 1 to 4% in digital assets could be appropriate. And this is stated by the Chief Investment Officer for Merrill and Bank of America Private Bank. So keep posted here at YouTube and as well as X and IG on Networkchain with Networkchain. We appreciate you watching us this week and watching us every week. Thank you so much. And we look forward to linking up with you soon on the Networkchain. In the meantime, take care. Bye-bye.